Hey trader, Steven here. It's Friday morning. I want to look at the S&P 500 and we'll look at the NASDAQ too. You see the S&P 500 broke the 20-day moving average, which it was eventually going to happen after one test, two tests, third one to fail. I had a nice reversal yesterday. Now there wasn't a ton of volume in the market yesterday and the market's down pre-market. So we'll just kind of have to wait and see if this reversal can hold. It makes sense that the market could kind of settle into this area so it could pull back some more. Hopefully, I'm really looking at this April 21 low, which if you look kind of across, it kind of is the 50-day moving average. Hopefully that is a place of support because you can see one piece of support, two pieces of support, and it hasn't tested it. Now, I don't put a ton of emphasis in declining moving averages as support because it's in a decline, so, and it doesn't make a lot of sense, but we'll just kind of wait and see what the market does. The market's now pre-market. I think if we could get another bullish reversal again and close above the 20-day moving average, I think that Monday would open positively, but we have to take this day by day because I sent out an email yesterday that talked about the S&P 500 breadth. So this right here, this is the percent of stocks in the S&P 500 that are above the 20-day EMA. The first pullback on April 21st, you can see where the breadth pulled back to. It pulled back to right here. So it pulled back to 41% of stocks stayed above their 20-day moving average. Then the second pulled back looked better because the pullback didn't pull back as deep, and the price was still above the April 21st pullback, so that makes sense. Then you had a third pullback, which is the last couple of days this week, went all the way down to 31%. So, and right now, as of the reversal yesterday, the breadth is still a little bit lower. So, slight negative divergence. I usually don't pay attention to negative divergences until the price breaks. Like, I'm paying attention now. But at the end of the day, I'm going to follow the price. So you can see first pullback, second pullback, and where we're at now. So it's just kind of something interesting. I've seen these divergences just kind of work their way out, and this can come out of here. But again, price literally trumps everything, so we'll just kind of have to wait and see. As far as the ETFs go, I'm trying to shoot some videos on Friday just to kind of see where the money is flowing, Monday through Thursday, where the money is flowing, maybe find some opportunities. Just kind of looking at all the ETFs of 240 that I track. You can see which ones are up. So obviously not all of them are up. I see a lot of emerging markets and metals in here because the market has pulled back. The market has taken a pause, which is completely normal. But you can see Turkey is now poking its head above the 50-day moving average. This is still very lagging. So even though you could argue that that's a buy signal right there, and I would argue that it is, it might play catch up, I don't know, but it's lagging a lot. Healthcare, you can see this healthcare ETF still up, probably just because of the big Monday of 6%, but this Invesco PTH is looking very strong, up 3.6%. The Bitcoin ETF is still looking pretty strong. It did pull back as now it's trying to pop. I wouldn't be surprised if it settles in a little bit because it did move from 5 to 12 in a matter of 2.5 months, so very, very quickly. This could go out of here pre-market. It's relatively flat. This could just be a kind of a pullback. But, I think it's still probably a little extended because right now, it's even 15% above this level. So I think that's a little extended. I think you want to get it closer to 10 if you want to consider it. Sugar, that traded zero volume yesterday, so I'm going to delete this off the list. It's interesting. I've been talking this Clicks, CLIX. They're long online companies and short brick and mortar. Very interesting thematic idea, and it is significantly outperforming. Does that mean it will continue forever? I doubt it, but because eventually brick and mortars will come back. But it's been interesting, and now the strategy is kind of really taking off. What really stood out to me yesterday was silver. If I look at the silver trust, so the silver trust is, the silver ETF. That was up 1.79%. Precious metals, you can see, had a nice day. So this precious metal kind of broke out. You've seen my shakeout video in the 5 cornerstones course. It broke out, pulled back, kind of shaked out, create that nice handle, and now it's starting to take off. So I think right now, as far as today, I do think precious metals seem to be silver. I would definitely look at silver more than gold because I'm looking at, the pre-market, and it looks like silver is up 3%. The futures are, where gold's only up like less than 1%. But I would say you probably, if you're considering a trade, I would definitely put some silver miners on the short list because they're looking kind of interesting. So if we look at the regular GLD, you can see right here, nice sideways consolidation, breaking out or trying to break out of this consolidation, nice volume stepping in. So you can see, and there's mostly miners, and here we'll just look at the GDX down here. Was already in a nice uptrend, pulled back, and was up 3.17% yesterday. So I think as of right now, we'll have to wait and see what the stock indexes do. But the miners are all of a sudden, they've been in an uptrend, but I think silver could be a nice catch-up trade. Now, if I go over to the industry ETFs, the banks, out of 25 industry ETFs, kind of really of the main industry ETFs, the banks, the regional banks, really reversed yesterday. Now, this kind of looks like if you look at a chart of interest rates, of the yields, it kind of looks like the yields, because it really sold off with interest rates. Banks are highly correlated to interest rates. It tried to pop, and now it's kind of testing the lows here, right? And so if interest rates start to pop, I think banks have a really good long-term opportunity if we're close to a low. Let me see if I can pull up a chart of the 10-year over here. So this is a long-term chart of the 10-year, but look, see, it's trying to, it's sold off, with the overall market. Yields did, and yields are positively correlated with financials. And now it's kind of trying to test the bottom. So this is a serious downtrend. It could take out the lows pretty easy. That wouldn't be hard to do. But banks reversed yesterday. Maybe yields reverse, and if they both do, or if the yields reverse, I think bank could snap back in a hard way. So I hope this was helpful. Just trying to give you some ideas to look at. But out of everything that I've seen, I would keep an eye on some regional banks, and I would definitely keep an eye on some silver miners because they were looking pretty interesting.